What's up guys, welcome to Oz Wealth and welcome to another video. What happened to the market today? Everything is almost in red. All the indices from the Dow to S&P to Nasdaq to the Russell, all colored in red. If you see the sectors here, almost all of them in red. Even the one in green are like really minimal, very minor gain on the healthcare, but it's just the entire environment of the entire market is not really helping, and I'm kind of finding difficulties finding good deals in the stock markets. That's why like lately kind of shifted the direction toward crypto and hoarding some cash for dips like what we seen today. And I think we're gonna be having more of a pullback. Most of the analysis than stock markets investors are talking about a necessity of a pullback, because really the market is very overvalued, and there's really no good deals to buy at this time. So what we're going through right now, we got massive delta numbers are rising, especially in the south. If you go through the map and see like from Texas to Florida, numbers of people visiting hospitals because of Delta are really rising. We got the inflation is really like spraying among the entire economy and really posing so much risk for investors. We got political problems right now, Afghanistan and what happened just a few days ago. We got the CPI numbers are really not encouraging. I'm talking about the consumer price index. It's really not encouraging for investors. We got the retail sales numbers coming up today, and it's below average. People are not spending money. People are kind of afraid. Whenever we see fear in the market, a pullback is expected. So as you see here, Dow Jones today lost almost 1.75%. The S&P 500 is almost similar. The Nasdaq close to 1%. The Russell crossed the 1%, 1.19%. When it comes to the sectors, healthcare, real estate, consumer staples, utilities kind of held up from the losses, but the rest from financials, information technology, energy, consumer services, industrials, materials, consumer discretionary, big loss, and it is just the beginning. I'm not a speculator. I don't like to anticipate bad news, but I think the market is really overbought. It's really overbought, and a setback. It's really what everybody wants, because people have cash. People have cash, and they need to deploy it. And what a better opportunity than investing in stocks on sale. So as I'm seeing right now, great news so far for people who are investing and saving and waiting for this opportunity to happen. Although we're still at the beginning, we don't know how much further down we're gonna go. My anticipation, and this is my personal opinion, I'm thinking like maybe 10 to 15% based on my readings, my scouting through the internet and investing channels I follow on YouTube. So we'll see. Like as you see here, healthcare today, like Pfizer, if you see Pfizer PF scored really huge score. We're talking about like almost 3.09%. J&J also did really well, almost 1%. The stock that really crushed it today is, I think, Moderna, if you checked it here, Moderna is like almost 7.5%, $400 for this stock. I mean, as you see here, like the market now is going through like a kind of transitional, like pivotal phase where like we get the virus numbers coming up. So all the investors are going after the healthcare stocks, from Moderna to Pfizer to J&J. Real estate is holding up here. Consumer staples like Coca-Cola, Philip Morris also scored all-time high today. Utilities, I mean, what better than utilities in times like this to, I mean, like defensive, recession-proof stocks to go after in days like this. That's why, like, what I preach here is diversification. Having the portfolio spread among all those sectors gives a very round-up, protected investments for long-term. We're talking always long-term here. So there's nothing to worry about, although we are a little heavy on the technical side, on the technical sector. But there's no worries. Tesla lost almost like 10% the last 2 days. We're not super worried about it. This stock is volatile anyway. Apple scored all-time high on the other side. Microsoft also. Visa also is like now recovering and coming back. So overall, we didn't lose a lot. If you go back to my portfolio and see the overall, we lost almost 1.37% today with a loss of $1,000, 284 short term. We're talking. It's not a big deal. As you see here, we started the day at 92,000 and we ended the day. Let's just stretch this a little bit. All the way we closed at 92,461, and at the end of the day we lost a little more of 0.32% to end up with 92,163. That's for the day. For the week we're down 1.68%. For the month we are up 5%. For 3 months we're up 10%. For the year we're up 23.32%. For overall we're up 31.21%. So quick rundown on the portfolio. As you see here, Tesla today with the 50 shares that I own, I lost almost 3.38%. We're right now at $663. Apple today lost almost 1%, below 150, so 149.77. Visa lost 1/3%, 123.53. SPHD, the monthly paying ETF, lost almost 0.5% at 44.48. Realty income, we lost like 0.22%. The real estate sector in general didn't lose that much, so nothing to worry about. Stag almost flat, 42.08. AGNC almost also flat, 16.25. Main Street Capital lost 1.22%. The financial in general kind of going through some tough time right now. J&J, as you saw, healthcare sector is on the top of the list today. So J&J, we own 5 shares here at 0.65%. Bank of America is down 2/3%. American Express down 1.12%. Caterpillar down almost 2.5%. Coca-Cola, consumer staples, down 0.35%. Philip Morris all-time high today at $102, scored further gain of 0.11%. And Pembina, the only energy oil pipeline stock, Canadian stock that we own here at 50 shares, lost 0.19%. And WP Carey almost ended the day flat at $78.98. As for the overall portfolio, right now we're standing at $116,993, and we are down 1.1%. The overall portfolio, we're talking about the sum up of the HSA, as you see here, $4,247. The Robinhood account that we just went through, $92,200 plus the cash, not counted here. The Roth IRA, we're talking about $20,000 right now, and the SEP IRA, $535. That SEP IRA is like whenever I max out my Roth IRA, which is mostly the VTI or the total stock market index funds, Charles Schwab version. Whenever I want to invest more in the this fund, I invest in the ETF version of that index fund, which is SCHB, which is the broad market index funds from Charles Schwab. So that's what we have for the SEP IRA. Going back to the main portfolio, as you see here, the annual income from dividends I receive is $1,935. Dividend yield is 1.65. Dividend yield on cost 2.09%, and the beta is kind of softening a little bit after Tesla is like pulling back, and Tesla was like almost 30 to 40% of the entire investment portfolio. The beta is coming back closer to the 1, which is good, which represent less volatility, more of a healthy, well-balanced portfolio. As you see here, and when it comes to the dividend growth, it's 2.5%, and the income expected from dividends today is August 17th. We're going to be receiving $5.55 from Caterpillar on the 20th. September 1st, Visa is going to send us $6.40. Visa is a growth slash dividend stocks. They don't pay high dividend yield, but we believe in those type of stocks right now based on what the economy and the market is going through right now. So feel like Visa, we don't care a lot about the dividends as much as the growth. That's why any extra cash is always welcome, but when it comes to growth versus dividend, we get more growth, less dividend, but you know what, we still have the combo deal, which is having them together in one stock, which is Visa. Same thing for Caterpillar, growth stocks, and been crushing it last year, and in the meantime pays dividend. Simply Safe dividend doesn't show SPHD, the monthly dividend stock, which pays always at the end of the month. It doesn't show it until 2 days prior to the paying day. So we're expecting $15 is going to happen right here. Johnson & Johnson is going to send us $5.30 on the 7th of September. AGNC is going to send us $12 on the 10th of September. And on September 15th, we're going to get $24, and it's a breakdown of $6 from Stags, $8 from Pembina, and $10 from Main Street Capital. And also it's not showing realty income, but it should be probably in a few days, which is going to be like $50. As you see here, we're trying to maintain like $150 income from dividends monthly, and after adding WP Carry a few months ago, we kind of balance this payment instead of having some months going up and other months going down. So as you see here, we got like October, we're going to be getting like almost $150. December high paying month, which is like a little above $400. And as we invest more, those numbers should go up eventually to get to the point where we got enough income from dividends so we can live off of and pay all the basic expenses of our lifestyle. So that's the plan. That's why this portfolio was designed, and it's a long-term investments. But we're working on it. We have the plan, and we know what we're doing, and we got the target. So what we got for the entire portfolio as well, the diversification, I'm just curious about where Tesla is. Like right now, 38%. The only consumer discretionary stock is Tesla, 38%. It's still like almost half of my investing portfolio, but that's okay. Tesla is still at the beginning. There's still more room for Tesla to grow. This stock is not only automobile stock, it's energy, it's the battery, it's a whole world of like EV, which is the entire future, and all the news and the numbers about this stock is very promising. So there's nothing to worry about, even with a pullback today and with a pullback maybe tomorrow. Those stocks are going to be owned for life. I'm talking about the 50 shares of Tesla. The information technology, we got Apple, we get Visa together combined. We're talking about like $22,000. So it's 25%, 26% of our investing portfolio. Real estate, I get WP Carry, and realty income is 21%. Financials, 7%. So we got Bank of America and American Express. Consumer staples, we're talking about Coca-Cola here, and we own 50 shares, it's 4%. Energy, Pembina is 2%. Industrials, I think this number represents Caterpillar. And the healthcare, which is Johnson & Johnson's, also 1%. And the rest of the sectors, from utility to communication to materials, we don't own any of those stocks. When it comes to the income I receive from dividends from those stocks, realty income is still on the top. It's almost 30%. So next is SPHD, 7.8%, AGNC 7.4%, Schwab S&P 500 index funds, the SWPPX is 6.8%, Main Street Capital 6.5%, Apple 5.5%, Pembina 5.2%, Schwab Total Stock Market Index Fund now is showing up after we started to load up on the total stock market from like VTI, but we're going through Charles Schwab versions, 4.4, WP Carry is 4.3, and Coca-Cola 4.3%. And that's it, guys, for this week. If you have not signed up for Robinhood yet, links are in the description below. You can get a free stock from Robinhood. It's a win-win deal. And if you have not smashed the like button, please do so. You can kick it, hit it, smack it, do something to it. It will mean a lot to me. And if you like the content of this channel in general, please consider subscribing and hit the notification bell. And until next time, you guys take care.